Hello YouTube, this is Michelle, the future prop trader. Yeah, got another great one for you. As you know, probably know about this one, but do you put it to use? We'll find out. So this strategy is one that you see very often when price is uh, coming down, right? There were like an impulsive move up, and then all of a sudden price come down in reverse, and then you get that trend, counter trend, reverse right back and create the W shape. Okay, now this is it. The name is double bottom. I'm sure you already figured that out based on the picture here, right? So you see bottom one, bottom two, right? Double bottom is a bullish reversal chart pattern in trading that indicate that the formation of two price bottom at the support zone. It is also known as W pattern because this pattern resembles the shape of the alphabet letter W. You can see that it is exactly that. That's what it is. As mentioned before, it is a reversal pattern. So once price going down, and then it's create a bottom and move back up, and then create another bottom and then move back up, and then you will try to catch the trade. You see here on the picture right here, you can see that price coming down, and then it create the first bottom, move back up and come back down, create the second bottom, and now the neck has been created. Now what you are looking to do is catch price as it break the neck and then come back and retest, then you buy. Now there's two ways to approach this. If you are somebody who's a bit more riskier, you know, you manage your risk properly, hey, you could catch some part of that move that is going up, and once it comes down and it goes up and comes back down, and you can see, if you see some nice candle pattern that tells you maybe a big engulfing bullish candle shows up right here, you might decide, or upside down or a hammer shows up, you might decide to take a trade there and ride it to the neck and keep your stop somewhere here so you don't lose all the profit. At least if price were to reverse, that you would still make some profit. But however, the proper way, or the more conservative way of playing this strategy or this pattern, is to allow price to break the neck and then reverse back, come for a retest of the neck. Once it comes to retest, that is when you would need to get your order ready and enter based on other criteria. You don't just enter. You may need to see maybe some candles and stuff that shows you that price is going to continue to move higher. Let me show you some other variation of this. So this is another layout that you can see on a real chart what it look like. Before we were just looking at the diagram, right? Because on the diagram it's simple to see it, but when you're looking at a real chart, it's not as simple. Sometimes you may think it's just choppy price action that is going on, but you can catch a double bottom once you know how to catch it. So price was going down and then come down here, create a bottom, move back up, and then there was some resistance on the left side here. You see price come back down and slightly went below. This is important for you to remember, because sometimes it will not just stay exactly at the bottom. It may break below slightly. Reason is because there are liquidity below the area. Once it create that first bottom, there are people that put their stop there that catch that move. So therefore the market makers, what they do, they would come down a little bit deeper, hit people's stops, and then take off for the real move, the other legs of that, and then break the neckline and keep moving, right? Now, still, they would think that there are traders that wants to come and just quickly place a trade right above the neck right there and catch the ride, right? Yeah, there are traders that do that. They catch the breakout. But what the market maker does again, it comes back down later on, take them out if they leave their stop, if they didn't take their profit, hit their stops, and then keep moving once again. So It is a simple strategy. It requires patience, and it shows up almost every day in the market. It's something you would catch mainly. I like to catch it in smaller time frame, right? Like the 1 minute charts. And then, but in order for you to do that, you look at the bigger time frame and see the trend. Once you know the trend, where the market is going, then you can catch those patterns easily on the smaller time frame. All right, let's go to one more. Okay, one more slide right here, and then we're gonna go for some real-time example on the chart so you can see it in action, right? So as mentioned before, it is not that hard to spot once you know. You need to find an area of support somewhere, right? If there's an area of support, price come to it, it hit it and bounce back and come back and hit the area of support again. You get your W shape, that's it. But now, when you're placing the trade, you can see, as I mentioned before, that you would look for certain candles. And for this diagram, you can see that they draw a hammer, like if you see a hammer. But you don't have to see a hammer as long as you manage your risk. If you see an engulfing candle or some candle that indicate that price is bouncing right back, you get in, right? So you can see it easy, break out, come back, retest, and then take off. And your stop loss should be all the way down here. Depending on what time frame you are using to take the trade, you might, if you don't have a big account to have such a big stop loss, hey, you might end up putting your stop loss right at the bottom of that candle that come for the retest, and you know, a little bit away from it, and then see if you can catch the price that way going toward your targets. All right, let's get to some example really quick so we don't make that video too long. I hope you get it. It is double bottom. It's a simple strategy. It's easy to spot, and it happens almost every day in the market. Whenever price is going a certain direction, coming down, if it's gonna reverse, a lot of time it create that double bottom, you know, before it reverse and go right back up. All right. You also spot it sometime in range pattern, right? If the market is have a large range, you might find it when after the range, the top of the range, and then price breakdown, come to the bottom of the range, it would go down there, and then people would buy, and it would go up and come back again, hit their stop, and then move back up to the top of the range. All right, let's go back to the chart now to see some real action of how this strategy performs. So first thing we're going to do is draw the, you can see where we are now. We are on the 1 minute chart, and you see over here, this is the 15 minute. What do you see on the 15 minute? You can see that price was just moving much higher, right? And then there's a big red candle that come up where it is right above a support area after they fill that little low volume gap area here. Prior, right below there, that's also a prior day high. So therefore, there are some supports here in this area, and we know that on the high time frame. So therefore, we go on the smaller time frame and try to catch that breakout on the double bottoming. Now, what I am going to do is I'm going to show you, as I said, you can choose to take the risk on the breakout and catch some move, and then after that, you wait patiently for price to come back and retest. We're going to draw a line right here to indicate that is where the neck is, right? And you can see the neck happen to be corresponding with an area of resistance here. So we're gonna place our line here right there. Okay, it is there. So now what we're going to do is get ready to catch the trade. We're going with 3 contract, and then with 3 contract, so meaning I'm gonna use 2 as the first target and then leave 1 as a runner. So that is the first example. On the next example, I will show you when price get retest and how to catch the trade. All right, let's get to it. All right, let's begin. I'm going to make sure price is not moving too fast so we can catch the trade. And this is where I said the neck is, right? So I'm gonna place my order there. That is the risky way of catching it because you are playing a breakout. But if you are a scalper like me, then that's okay, because you will take the trade in the smaller time frame, right? And look at whether the chart, my entry chart is the 800 ticks. So therefore, my stop will not be as huge as if you were trying to catch a double bottom on the 15-minute or anywhere else and then try to take the trade from there. Your stop would be gigantic, right? So I'm gonna adjust my stop down here, right? I'm gonna put it right there, and I'm gonna put my first target to be right here, right up here. Oh, that happened automatically. That's because my ATM strategy is set up where after 5 point for it to go to break even. That's why it just got moved by itself. So we're gonna try to catch the first target, which is the top of that. Oh, I went too high. I need to catch the first target right here, right at the top of that candle, because this is a nice huge candle. So now I would keep my runner and start moving my stop as this is going, right? That would be the ideal for the trade. So I didn't go too heavy, but I did leave a runner just so if price continue to move higher, which most likely price can try to get all the way up to the top here after double bottom right here in this area. So but I'm not saying that's what's gonna happen. This is we're just gonna watch the trade and let it play out. Now, because of time that we need to keep the video not too long, I am going to try to make sure that trade close and not go for the entire move, so I can show you the next example. All right, so I am just gonna move my stop to the point where I get stop out right here on my runner on purpose. But you can see that clearly price continue to move, and possibly next target would be all the way up here to the 17,741, right? But I'm not gonna go all the way up to that point. It looks like it's moving fast enough. Well, okay, all right, so I got out of the trade. Now let's go and to example number 2, so you guys can see the other way of catching the trade while it retests. Now, before I do so, right, I would like to mention that for you guys to hit the like and subscribe. As you can see that my subscriber base is not that big yet. That means many people is not catching that good content, that great content that I'm putting out there. So you guys can help by like and subscribe, and also share the video in your social media and everywhere, so other people can catch this good stuff here. All right, okay, we're back. So as you can see, now price is in the area where they are retesting the neck right there. Now if you are an ICT trader, you can see there's also a small fair value gap in that same location right here. I don't exactly trade, you know, everything ICT, but I know about fair value gap, the imbalance stuff, because ICT didn't come up with it. We know about that. But I do appreciate that ICT is preaching it out there. You know, people can learn about this. All right, there's a small fair value gap or imbalance right there. So we're going to try to see how we can, let's see if we can catch the trade right in this area here. Now you see it comes to the neck, it playing around, right? I haven't taken the trade yet. I'm taking my time, right? But I am going to. So let me prep. I'm gonna bring my okay, we'll try to catch it around the 700, because 700 is right there, right? And then my stop will move my stop at least all the way down here, just to protect myself. My target is, I'm looking to get first target somewhere up here, right? All right, let's go. Okay, I need to decrease this a little bit. It's gonna be too fast. Okay, all right, here we go. All right, I'm in. I'm gonna adjust my stop really quick so I don't get stop out, right? My stop is around the 80 area, as I said. So let me see right here. Yeah. So my first target where it is, I think I'll leave it there. That's fine. I'll adjust my stop once again because the break-even mechanism that I have in it just kick in after 5 points usually, right? So let's see if we can catch this. That is why I adjust. I said my stop should be around this area. You see what happened, right? Price is fluctuating there. It's not ready to move yet. So since I don't want to get stopped out, right? I'm staying there at the 80. Let's see. Let's see if they don't stop me out. Well, I didn't get that. I didn't get stopped out. So I'm keeping the trade on. And I'm trying to catch my first target right here at the 20 area. Right? It's the first two contract. And then I will leave a runner if things gonna go to the moon. Now, what happened is on the retest of the zone, of the neck of the double bottom, you can see that they chop around here a little bit, right? So we're just gonna have to stay in the chop and let things play out. And it happens sometimes when you get in the trade, and you may have to stay in the chop for a little while because if you are confident that price is gonna go where you think it's gonna go. So I think I may even go a bit higher. Let's say right here at the 30 area instead of, so I'm keeping it there at the 30 area. I'm gonna speed up a little bit so we can get things moving. So get our first target out, right? So you see price taking its time, but we're still in the trade. We're not panicking. We're not, we're trying to reach the next area where there might be some resistance. Here we go. So our first target hit. So now we'll put, move our stop up, and then we're going to trail the stop. And maybe not for too long, since we want to be able to not make this video too long. All right, that's it, guys. You can see that was the other way of catching this trade. That's the proper way to catch it according to some people. But this way is also proper if you manage your risk properly. Like you wait, first bottom, it come down, after it does the second bottom here, right? You can place your order right here if you want and put your stop right below there. If price come back there, you won. If you're not won, it's gonna do what it does right there, and then you catch a nice move. All right. Hit the like and subscribe, and I'd like to mention that my code for Apex will be down in the description. If you are interested in trading with Popfirm, check it out, use my code, and most important thing, hit the like and subscribe. And I hope you learned something from this video, because this is a great strategy, and it happened on a daily basis that you will see some double bottom on all of these time frame, from higher time frame to smaller time frame. But I like to catch them on smaller time frame, but I look what's happening on the higher time frame to decide whether I'm gonna take it on the smaller time frame. So that's it. Hit the like and subscribe. Take care.